Hello friends, in the last video we have seen what is retail banking and what are its advantages and also the constraints. In this video we are going to see what is the evolution of retail banking. That is, evolution we all know that the development or the from past to the present, right? So we are going to see how retail banking has been taken as the business model. In India before 1960s, banks were lending to the big corporate clients most of the time, right? So they used to deliver the products like working capital or project financing. So this was restricted to the class clients. We all seen what is class client and mass client in the last video. Actually, class client is the HNI customers. So these were restricted to the HNI customers to satisfy their needs from the banks, right? So to satisfy their needs, various products were introduced by the banks to serve them. So over a period of time, we all know that the needs and wants of the customers never ending process, right? So the needs and wants of the customers has been expanded or it is keep on changing. So banks were in a position to give more and more products to satisfy the customers' expectation and their needs. So what banks did is bank redesigned their products and services to meet the diverse growth of organizations. So banks were unable to service the diverse needs with the already used traditional methods, so they move on to the functional focused method. Okay, so first of all we used plain vanilla commercial functions. Plain vanilla in the sense there were only ordinary standard methods, there were no extra or special features added to that product, so they move on to functional focus. So for example, if we take as investment banks, what they do is they give financial advice to the individuals or as well as the institutions to raise their capital or else to invest the income likewise. So merchant banking, additional to the investment bank, it will have the debt raising also, as well as exchange banks we have for the exchange of foreign currencies, converting their money. Then payment banks are there, then small finance banks are there, specialized banks, local area banks, so on. So these types of functional focus has been redesigned by the banks to meet the expectations of the customers. After changing from the traditional to the functional focus, over a period of time, banks were in a compulsion to redesign their products and service models again. Do you know for what? Because to satisfy the ever-changing needs of the existing customers and also the expectation of new class of emerging customers. So to fulfill this, banks brought the new business model called retail banking. So retail banking is that is focused on the individual customers, small business customers. In 2015, Capgemini and EFMA. EFMA is actually European Financial Management and Marketing Association. What actually they do is they used to promote innovation in the retail finance, and also they used to keep discussions, debates, and also researches regarding the retail banking. Okay, so what they publish, they have done a research, and what they published is banks were unable to satisfy the customer expectation as the customer expectation is rising faster than the bank's handling. So because of this younger generation, that was the main reason they have said, and the competition of non-bank players, we all know that even for gold loan they are moving for Muthoot or some other thing, even though the interest rate is high. So the competition for banks are always increasing, and also they suggest that banks need to invest more on the front end. Do you know why front end? Because we are the first interaction to the customers and their experiences, and we will be directly knowing what are their needs. Okay, then comes the fintech to the picture. Actually, the fintech is the technology that we use to modify or enhance our financial services. So we all know that GPay was the most used fintech platform in our country now in India, and our credit card was the first fintech product that has been used. So because of this easy to use, fast service and good experiences, people were moving to the fintech products nowadays. And then comes the retail banking scenario in India. In the late 1970s as well as in early 1980s, foreign banks were operating in India, right? They set the trend for the consumer banking models. They've only started actually introduced this kind of products. Mainly Standard Chartered Bank and Reliance Bank, they are said to be the pioneers in introducing different types of retail products. Then comes the Citibank. Actually, Citibank created the first credit card product early in 1980s. So public sector banks, private sector, and as well as foreign sector banks adopted different models and approaches to increase their retail banking business. So it actually created the retail war. Retail war in the sense these three types of banks redefined their business models and technologies. End of this, it was a win-win situation for all the three sectors. Do you know why? Because everywhere the retail banking business has been increasing only. So they all focused on what are the new technologies to be introduced and what are the customer expectation and how to fulfill their needs. Here comes the important factor, that is IT revolution. We all know that this core banking, actually core banking solution has been come after the IT revolution. So core banking is the backend system that processes banking transaction across various branches of the bank. So traditionally we have been not using this core banking system. So wherever our account is there, only in that branch we can take the cash or deposit or anything like that. After the core banking, we can process any type of transaction in any branches like internet banking, phone banking, ATM, fund transfer, point of sale. So everything came into existence. So nowadays, the foreign banks as well as the new generation private bank has been seriously looking under the bottom level of the customer pyramid. Actually, bottom level in the sense the main, that is retail customers, that is individuals as well as small business customers. We all know that our main competitor is the NBFCs, that is non-banking financial companies. For example, Shriram Finance or Bajaj Finance. They have been aggressively calling each and every customer to sell the retail products and increasing their business. So RBI on a periodic basis releases the bulletin regarding the business performance achieved in retail asset and other services by banks. The bulletin name is actually Report on Trend and Progress of Banking in India and Financial Stability Report. Actually, this gives the data on how the retail business has been performing in the banks. So according to that, in 2019 to 2021, all the retail loans of the banks has been increasing. Actually, auto loan, credit card receivables, everything has been in a growth. There may be decline in some of the field, but overall it was a growth for the sector. Then comes the white label ATM and micro ATMs, which plays a major role. Actually, white label ATM is the ATM which has been owned and run by the NBFCs, and also micro ATM also, unlike the POS or point of sale, micro ATM also has been increasing. QR codes, after the QR codes came into existence, even the ATM use has been reduced a lot. As per the report, March 2021, more than 96 million static QR codes has been registered in that 3 years. Actually, even we people also, bankers also use the QR codes instead of ATM or instead of cash, because it is more effective, cost effective and convenient way of payment, mainly while doing small value transactions. For example, even in a single petty shop, they are using the scan pay nowadays. So then comes the prerequisite for success of retail banking. Prerequisite in the sense, what are the factors that are helpful for making the retail banking success? The first one they have given is presence of an efficient delivery mechanism. We all know that the main bonding between the customer and the bank depends on the quality of service we offer for them and the fairness we do. Then the thing is affordability of pricing. Actually, this plays a major role. For example, just think, for scanning a QR code, if we charge the customers, what they will do, they will automatically move on to the third party application. Likewise, promptness of service. Just think, if there is any delay or error in our service and they are asking to us and we say it will take some 7 days, it will say take some 5 working days. If we say like that, what they will do, they will automatically switch over from our bank. So banks need to deliver the product and services to the customer in a safe, secure, prompt and cost effective manner. This was the thing we need to focus. The future depends on how the banks are going to give different innovative products to satisfy their customer needs. Then comes the direct banking. We all know direct banking is without physical existence. It was the fast growing. Take a simple example. If we want to open a savings account, we will ask the customers to bring their Aadhaar card, PAN card, all the Xerox as well as the originals with the photograph, and they need to spend some time in our bank to open this. So digital banking, with in your mobile phone, they can open the account, they can operate everything from their end. So next comes the product appropriateness. So according to the records and the assessments and the data analyst, banks used to create the product according to the specific group of customers. So this gives improvement in the business also, to bring the new customers as well as to retain the existing customers. Next comes the pricing. Actually, all the products and services which we provide to the customers depends on the pricing. It means depends on the cost plus method or the direct and indirect cost that focus on delivering that product to the customers. So our goal is to make profit and revenue out of that and also to satisfy their customers' needs. So then comes the scoring models. Actually, we all know that credit score gives the financial discipline of the customer and also for decision making as well as predictive information of the customer or else their delinquency or default that may be used in the loan approval process and with greater transparency and also efficiency and risk pricing. So next comes consumer protection environment. Actually, for every services it is established by law. So the fair practices and also the protection of customers' right, enhancing the quality of customer service is very important. So this consumer protection covers a wide range of topics like product liability, privacy rights, unfair business practices, fraud, misrepresentation and many other things. So large amount of penalties are levied on banks by the regulators mainly to protect consumer interest and the unfair practices. So these are needed on the protection of the customers' rights. So we will see the remaining topics in the next video. If there is any doubt, just ping me in the comment section. Thanks for watching, friends.